welcome to everyone. Thank you for joining TechCabal Live once again. This event speaks to the business and human part of tech and innovation in Africa's reports and events like this. We also publish TC Daily Newsletter, which is a comprehensive round of news and events across Africa. This event is brought to you by Payaza, our partners, and is a dynamic and innovative fintech payment gateway that enables business of all sizes across multiple industries to send and receive payment faster, more efficiently, and securely without suit. Thank you so much. Welcome to you, Evelyn. Welcome to you, Felix. Welcome to you, Taiwo, and to our esteemed audience. In the chat room is my colleague, Victoria. Victoria will be attending to all your questions and your needs. So please, let's make sure to keep the chat room civil. Do well to introduce yourself and also network in the chat room. Yeah, thank you so much. So before we go into the event proper, I'll be bringing up Taiwo Adeeko, who is the global head of operation and Payaza to give us a short presentation.
Okay. Good day all, standing on the existing protocol. So the presentation we center on the role of fintech in the projected growth of e-commerce in Africa. Right. E-commerce being a new way or a modernized way of doing trade as against walking into any store on the street of in Nairobi to pay for a goods or service by means of cash. However, what e-commerce tends to do is to make it more of an online conversation in terms of what to buy, what service you need, and how that is being paid for using different payment options. Now, when this economic activity takes place, the bottom line for both parties, the buyer and the seller, then the payment processor or the guys behind the scene, is to make an income, a revenue from it. The revenue projected for fintech e-commerce related businesses in Africa is about 75 billion. Now, that is a good mile out. What is the intersection of fintech players, companies in tapping into that, which we definitely contribute to the GDP of African economies? According to United Nations Conference on Trade and Development, it is projected that over $70 billion will be contributed to the GDP growth of African economies through e-commerce. Now, fintech companies have a great, if not greater, role to play in tapping into that. So looking at the charts here, from 2017, the revenue there was around 11 billion, which grew to about 33 million in 2021, then 36.1 billion, and that is expected to double by 2025. Now, today in Africa, the e-commerce space are still battling with challenges ranging from mistrust of online shopping. So mistrust of online shopping speaks to security. If I'm a buyer on your store or your website, how secured is your payment gateway? What confidence are you giving me that once I put in my card details, maybe I'm using coins, stable coins, my wallet details, how secure and safe it is with you against any breach? These are the roles fintech needs to fill in by providing secured and trusted payments, which we pride ourselves in Payaza as to be the most trusted payment gateway. So in recognizing this as a major challenge to e-commerce in Africa, our platform is secured, PCI DSS compliant, and we adhere strictly to data-related regulations. Then also, we have a case of fragmented markets. I'm somewhere in Lagos and I want to buy something in Nairobi. What is peculiar to that market is M-Pesa. I've seen a user or a seller that sells what I want. However, how do I get M-Pesa across to this seller on the street of Nairobi? This makes it very difficult for e-commerce to thrive. Now, fintechs are playing a significant role in that by enabling a payment option that are country specific, which will bridge the gap of me trying to find someone in Kenya that would need Naira in Nigeria to pay that seller. So on our checkout today, if you were to pay for someone who sells in Nairobi, a Momo option is enabled as well as a card. So if we cannot use a Momo option, popularly referred to as M-Pesa, we've given you the opportunity to use your bank's card to make that payment, which has resolved the issue of fragmented markets due to payment method. Now, another challenge is cash on delivery, because they believe that once it is a cash, you give me, I pick. That means the issue of trust is eliminated. Now, what role does fintech needs to play here? When we make payment solutions for our e-commerce merchants, the key part is the settlement, which will be seen as the cash payment, as seen as a challenge here. So what we do is we ensure that the settlement cycle is business friendly with little or no cost in getting the money across to the merchant. And also we are so innovative about the settlement method. So innovative in the sense of settlement method is we could also give you a wallet base wherein from your settlement, you could also cater for other expenses of the business without going to the traditional banking system. We could also allow you to create a card that can serve your need for any cross-border payments, as well as trying to go into the space of the stable coins, wherein your fiat can be converted to a coin for your use. So how can fintech companies address these challenges? Like I rightly said, while speaking on the issues that the e-commerce space are facing in Africa today, the first thing is to simplify payment process. Now, not just simplifying the payment process. Yes, I know by a click of a button, I can make a payment using my international card to a trader on the streets of Lagos Island. However, while simplifying that, security is not a trade-off. We embedded security into the simplified payment process. Also, when I'm making payments, we ensure that that payment experience is not just a web version. I can be using my iPhone and I should be able to make payments using a digital wallet like Apple Pay, which is synonymous to iPhone, or Samsung Pay without picking out my card details. That is a seamless mobile experience. And also, fintech is a collaborative effort of different players in the ecosystem. Strategic partnerships across border, within the same border, we also help in addressing the challenges in e-commerce, like Payaza today. We are registered in Kenya. We partner with M-Pesa, with Safaricom, to ensure that any user of our payment options or a merchant can be able to collect and pay in M-Pesa, which is a mobile money method, same as mobile money in Ghana. And each of these regions we operate in today, we are so conscious of partnering with the major players there, both on the regulatory front and commercial front, to ensure that the nuances of that market is captured in our product delivery which will help in delivering the projected 75 billion revenue from African e-commerce space. Then also for us to be able to solve all these issues plaguing the e-commerce space, this will be data-driven, not just sitting in our offices to say, hey, I think this is the solution for X. No. Products will be delivered based on data-driven insights that speaks to market need, and that data will be both pre-product launch and post-product launch. Post-product launch in the sense that what is the feedback we are getting from the end users of our products. No matter how beautiful, how seamless, how good a product is, the data from the user speaks volume in product optimization, feature adds on. And if fintech's company can see themselves releasing products, innovative products with data-driven, that means the projected 75 billion from e-commerce revenue in Africa will be a child's play, and they can mine the gold in that space. So, which leads me to how is Payaza offering solutions for e-commerce in Africa today? Now, based on mobile for development, they projected that 61% of internet penetration as at by 2025 will be from Africa, and 33% of this will be on 4G network. So Payaza is keying into this by offering innovative products using cards, payment link, QR codes, and mobile money, as well as digital wallets. So to get to know about Payaza, you can easily sign up on our dashboard, which has flexible collection and payment, either using your mobile SDK or APIs. Our settlement and reconciliation takes care of your cash-related business, and we have a 24/7 support helpline. And also, finally, the last issue being faced by African e-commerce is a case of working capital. In Payaza today, we realize that, and we've made an innovative product to take care of that called Payaza Boost, which is targeted in ensuring that the working capital of e-commerce merchants and offline commerce merchants can access this as simple as just applying, we evaluate, and we disburse, which will help their business to have quick access to funds, no collateral required, and a flexible repayment method. And if you want to get to know more about Payaza, what we stand for, and how we are bringing out innovative products to tap into the 75 billion e-commerce projected revenue, you can visit our website, www.payaza.africa, and we have our emails out there for you to start that conversation, and we take your business to greater heights. Thank you.
Thank you so much, Taiwo, for that presentation. Thank you so much to the team Payaza too for that presentation. While Taiwo was speaking, our moderator stepped in. Abraham, are you in now?
Yep. I am. Good morning. Good morning. Thank you, Daniela, for holding the fort. Had to do a bit of wrestling with Zod, and thank you, Taiwo, for that presentation. That you can hear me properly. Taiwo, Evelyn. Okay, that's all. Can you hear me now?
Yes, Abraham, I can hear you loud and clear.
Yep. I guess you can hear me very well now. Okay. Thank you, Caroline. Okay, then I guess we can go straight to the questions. Taiwo, and Evelyn and Felix. Thank you all for making the time to join the conversation, and thank you everyone who's also participating. I see we have a fair number of people who are joining us for this conversation. So just to go straight to the questions, I will let you take a breather, Kaiwo, because you've been speaking for a bit. So I won't start the questions with you. Uh, even though I'm supposed to do that, even though I'm supposed to start the questions with you, but I'm not going to do that. Divine, I see that your hand is raised up. May I ask that you leave your comment or question in the chat box? And someone will, I'll see if you leave your questions or your comment there. I'll see, then I'll respond to it. Thank you. Okay, to proceed, Evelyn, you've led, fintech products for e-commerce, for an e-commerce company. You still do, and you've done it for telcos. You've done it for, and now you're doing it for Copia, which is very right from mine. I'd love you to respond a bit to some of what we've already heard now from Taiwo. I think he's touched on some of the problems and challenges that fintechs, that e-commerce firms face with regards to collecting payments digitally. I want you to speak to that from a perspective as someone who operates in the e-commerce space. Is that something you can do for a few minutes? What is this challenge, or what challenges, particularly have you seen in your experience, that you think are some of the most common challenges, or maybe the challenges that are not very common, but they are very pressing, and they are like the toughest challenges you've had to deal with, working with collecting payments from an e-commerce standpoint. Evelyn, please.
Thank you, Abraham. I think I'd like to start by checking that I can be seen and heard clearly. Fantastic. Allow me to begin by sort of giving a brief of who we are as Copia for the benefit of everyone on the call. So Copia is a B2C e-commerce business that serves mass market Africa, which is largely rural in nature. We also pride ourselves in being the one entity that's been able to successfully penetrate and consistently serve this customer segment. And some of the ways we've been able to achieve this is through a very robust and state-of-the-art logistics engine, through our distribution network of over 50,000 agents, 80% of whom happen to be women, which is something that has taken a more organic trajectory than design specifically. And then our intentional drive to digitize our ecosystem of agents and customers. And so to answer your question, I'd like to start that by saying that we live by an overarching principle in Copia, which is driving ease for the customer. And looking at the specific challenges, there's two I'd like to focus on. The first being friction and the second being cost. So by increasingly reducing friction and managing cost to the customer, I think there's a significant opportunity to enable acceleration in the way we penetrate markets and the way we sustainably scale inclusive financial services. With friction, we need to be thinking around continuously enabling access and enhancing customer touchpoints. I'll give an example to some of the ways we've been able to solve for this at Copia. Our financial services have been built on the bedrock of payments, which at the moment have largely been leveraging existing rails with opportunities to innovate and take a trajectory around solving for payments on our own. In the course of it, we have spent a lot of time understanding our customer needs, and a lot of financial services have emerged out of immediate customer needs, one of which happens to be a layaway product, which has enabled largely excluded customers be able to pay for purchases that are aspirational, which then solves for inclusion. So in a nutshell, what I'm trying to say is, if we can drive efforts more towards increasingly reducing friction and managing costs towards the customer, will have better results in terms of penetration and scalability.
Well, thank you very much. I'll bring back some questions to you, Felix. You now lead the team at things that you guys do at Tendo is that you help entrepreneurs to grow online business, right, through Tendo, and like online is also helping them get paid for the business that they conduct online, right? And I'm curious, you have a very ambitious goal to do what you're doing now, to do it for 1 million businesses across the continent. And is there a lot of static? Okay. Let me sort out that. I guess it should be better now. It should be fine. Because someone mentioned that there is no static. I hope you're not getting that static. Anyways, back to my question, Felix. Right. One of the big things that you want to do is you want to scale the services and help 1 million businesses. That's a huge number, by the way. Right? And then the question is, on the path to getting 1 million businesses to conduct their businesses online, 1 million entrepreneurs to conduct their businesses online, how you are thinking about payments. What are number one question, right? And I think the biggest question is, what is the challenge? What is the challenging thing, the most challenging thing behind receiving online payments? So we help your customers get paid online. What are the most common and the most consistent challenges that you've faced with helping to build that? I'm not sure how many countries Tendo operates in right now, right? But my guess is if you're doing this across multiple countries, the problems, they stay the same, but they have there's a bit of variance and a bit of difference in the different countries. Yes, what is that one problem that is common, across all of the different places where you operate now, Felix? Yes.
Sure. Thank you so much, Taiwo. Just confirm it if I'm audible. Then, am I audible clearly?
Carry on.
Awesome. So yeah, just for brief context as well, Tendo is, like you rightly mentioned, a social commerce platform that enables anyone in Africa to start an online business with no capital. So what we do is we enable people who have social media presence to find products, add their profit to these products, share on social platforms, and Tendo handles everything in between. So from providing the technology to providing logistics, to delivering to their customer support, we handle all that on behalf of the seller, and they just find the customers and we send them the profits that they added. We are currently live in Ghana and Nigeria, and recently launched in South Africa as well. So with regards to the challenges that are, I would say, probably unique to the African consumers, I would strongly emphasize that we think that one of the most interesting trends that we are seeing right now in Africa is social commerce, right? That's basically the use of social media platforms to complete sales. And we believe that that's the future of commerce, where a lot of the transactions will not look like what we've seen in the West, where there's one big platform where everyone is buying from, but it will be led by individuals and small businesses selling through social platforms and leveraging the massive reach and trust that you can build on these social platforms to build their businesses. So as a result, we think that a lot of value can be unlocked by enabling very native payments functionalities on these platforms, right? So one of the challenges that we face right now is it's very easy to complete payment on a standard e-commerce platform. That's very straightforward. But for many small businesses, it's a very big challenge for them to complete or make sales on these social commerce platforms like WhatsApp and Facebook for their customers to actually make payments on those platforms. So I think there's a lot of value to be unlocked by making payments on these social platforms more seamless and native. In markets like India and LATAM, we've seen the platforms themselves lead this change through partnership and building tools that makes payment native on their apps. But I think it's important that locally, even though those solutions are not available yet, we start leapfrogging there and ensuring that small businesses who leverage on these social platforms can actually collect payments efficiently and seamlessly, just as they would on the website. And I think finally, I believe that in order to also solve the challenge of inclusivity and trust, being reliable is also very necessary. I think Evelyn alluded to this during her time. And I think there's two main aspects to that. The first one is obviously ensuring that the payment infrastructure itself is reliable. There are enough redundancies that have been built to ensure that the rate at which customer payments are unsuccessful are very low. And then secondly, building payment flows that work without internet. So like I mentioned, we are live in Ghana and Nigeria. And for markets like Ghana and Kenya as well, we see that we have a lot of payment success because this core idea of ensuring that payments working without internet has been executed very well in this market. In Ghana and Nigeria, mobile money payments can be done through USSD, which triggers the mobile money account for the payments to be sent. And there's a need for us to see more solutions like that across the market so that people who have very limited access to internet can also complete payments in a very seamless and reliable way.
Okay, perfect. Perfect, and thank you very much. So now we'll go back to regular programming and just go into, I hope this is better for those of us who were self-complaining about not being able to hear me properly. I hope this is much better. It feels odd. Okay, yeah. Anyways, let's go back to regular programming. Let's see if it will sort of work out. I have a bit of rain. It was raining a bit, so maybe that's part of why the internet is a bit unstable. But going back to regular programming, I have a few questions, and I'm going to come to you, Taiwo. I skipped you at the beginning because you had already spoken a lot about Payaza and what you guys do, right? And I'm curious, from your perspective, one quick question for you, right? To what extent is there an intersection of e-commerce and fintech? I ask this question a lot because when you talk with people who operate in fintech, in the fintech space, one of the things that you hear is how fintech unlocks other verticals, right? Fintech unlocks XYZ. Fintech makes it easier for you to conduct e-commerce and whatnot, right? I'm going to ask this question to everyone, but I want you to start this question because what you do with Payaza is essentially help businesses, to integrate payment solutions to their offering, right? And then the question is, to what extent, is e-commerce, for example, reliant on payments, right? You've run this business for a while. Do you see instances where e-commerce can operate very well without necessarily needing to integrate the payment trail? And to what extent do you see that happening?
Okay, thank you, Abraham. For e-commerce to operate without payments of the fintech ecosystem, and I think that will take us back to the days of trade by barter. So I'm not saying that's happening anytime soon. And even if there will be simplicity in the way they trade, there will still be a need for them to use the fintech system, which is more reliable, innovative compared to the traditional banking system. Now, at Payaza, one of our vision is to be the most trusted payment gateway in Africa, which addresses the main challenge of a buyer from an e-commerce store to say, how can I trust that my payment details are safe, right? Now, when we take care of that trust issue, sales is guaranteed to increase. And like you said, a lot of verticals will be unlocked doing that. And not just being the most trusted payment gateway. Our mission also speaks to empowering seamless and secured transactions through innovation, reliability, which Felix also spoke about, to say, what is the uptime? And today in Payaza, our uptime is as good as 99.99%. I won't say 100% because I know technology fails at times. However, the redundancy kicks in to ensure that the impact on our ecosystem, on our merchants, is extremely low. Now, when we pride ourselves through secured payment, innovation, reliability. Who are the key players behind this? Our people. We prioritize their growth and satisfaction, because without them, there's no way we can fulfill our vision as well as our mission. And not just our internal people, our merchants as well. We take care of their businesses, because we understand that while we are prioritizing the employees' growth and satisfaction, they are also to serve an ecosystem, which is the e-commerce. How do we also look after them? We sensitize them on how best they can protect themselves from the bad actors. Today, cybercrime is a thing that affects every player in the ecosystem. When you talk about chargeback, how do you ensure that our merchants as an e-commerce is educated enough to know how best they can face chargeback? Chargeback is part of the payment system. However, we can reduce the impact, the negative impact of chargeback by doing the right things, dotting all I's, crossing all T's. This ensures that the e-commerce and fintech will intersect at a profitability junction, wherein the e-commerce merchant smiles to the bank, a Payaza smiles to the bank, and my employee as well, who are developing all these products for use, are also experiencing growth and satisfaction in their own life. And so doing, I may be wrong, but I'm not seeing a case wherein e-commerce will be a standalone and say, oh, I don't want to deal with fintechs. I'm not seeing that in the nearest future. Thank you.
Okay, that's interesting. Very obvious, obviously, of course. You run Payaza. I'm going to come to you, Evelyn. I'm hoping that you have like a different thought about this. That's a hope. You don't have to oblige me. I've been down. I've seen Copia's operations. You operate mainly in peri-urban and rural parts of Kenya, right? And I've seen how you operate. The question is, from Taiwo's perspective, right? E-commerce is always going to need fintech, which is understandable. I mean, both products or both ways of conducting business is being done online. Yes, but from your perspective, right? Is there a point, at which e-commerce begins to need less of fintech in order to I think Taiwo mentioned the statistics from the GSM Association when he was making the presentation, right? And the question from my end is there a point at which we begin to see less of an emphasis on digital payments or collecting these payments digitally, right, versus being served online? I need to order something, I place an order, I get the order. I don't necessarily have to make my payment online or with M-Pesa or with any one of these digital solutions, at least at the moment, right? I'm curious what you think or what that looks like from your perspective.
All right, thanks, Abraham. And I'm actually going to spend time qualifying what Taiwo was speaking to. So from our perspective, I don't think one can operate independently of the other. There's more of a symbiotic relationship, right? So payments fuels the e-commerce engine, and the e-commerce engine then provides an opportunity to continuously innovate payments and simplify them, enhancing customer experience. So it's more of an increasing trajectory towards convergence, where e-commerce and fintech strategically collaborate. And from our standpoint, I've mentioned this earlier, that the e-commerce engine is fueled by payments, which then leads to embedding additional, more relevant financial services, which the bedrock of which is solving for payments for e-commerce. All right. And if we can take some learnings from some of the large global players, we've seen what Amazon has done with Amazon Pay. We've seen what Alibaba has done with Alipay. And we need to appreciate that the opportunity for this convergence is now and the market is ready. So the key to further unlocking the next level in being able to scale e-commerce offerings, to be able to continuously innovate in the fintech space in offering relevant financial services is through strategic collaboration.
Let me do a bit of pushback here, and then it's not really a pushback anyways, just to also present an alternative perspective, right? We've seen this is not traditional e-commerce, right? But we've seen ride-hailing companies, your Uber, your Bolt, and whatnot. We've seen them go from exclusively offering wallet payments and digital payments in app, right, to allowing people to pay with cash offline because they're trying to boost their ridership numbers, right? And while Alipay and Alibaba is, and I mean, I think China has like a fantastic digital payments market that we aspire to, right? Where we sit right now in Africa, right? The question in my mind, and feel free to talk about this, Felix, because what you're trying to do is social commerce, as you explained earlier, right? And feel free to push back and talk about this from your perspective, because next question is coming to you, Felix, right? But the question then is, from where we sit in Africa, right? Are we at that point where we can very conclusively say, that look, there is ample opportunity, for payments to be dominated, or for e-commerce, right, to converge, just to borrow a word from you, Evelyn, right, to converge with fintech in the short term, especially in the short term, right? In the medium term, long term, I'm not a very good prophet, but in the short term, right, the question in my head is: are we at that point where we begin to exclusively focus efforts on making e-commerce and fintech work together, right? Or should we also be thinking about alternative approaches, realizing the place that cash and offline transactions still hold in like the ecosystem and the marketplace? But you do this with social commerce, Felix, right? Social is an entirely different beast. I'm curious if my thinking applies, to someone who's say running uh, an Instagram shop, and you're sort of enabling that person to make transactions, or maybe even people who do e-commerce with WhatsApp. We've seen all sorts of things happen in the social e-commerce space. But I'm curious, from your perspective, Felix, is there a point, or what is that point? If there is no point, that's an interesting. That would be an interesting. What's the word? Agreement with all my guests, and I'm happy for that. But also to see if there is some bit of divergence in the panel, where there is, maybe we need to just think about the place of cash, the place that cash transactions still hold. When you think about the fintech payments, Felix, please.
Yeah. So yeah, I think that's a very interesting point, and I believe that from a short-term convergence perspective, there's actually an opportunity for that to happen. However, where my opinion differs is it's going to be very, very different from what we've seen in the West, or even with Alipay and markets like that. I think we would have to have solutions that are actually relevant and practical to the way Africans actually transact. So, for instance, with Tendo, some of our transactions are still cash on delivery, right? And so, in that particular case, there's a lot of value to be unlocked at the last mile when customers are actually receiving their orders. And this is very interesting because in most cases, especially here in Africa, in many African markets, e-commerce transactions or payment experiences do not end on the e-commerce website. That's typically the experience with the West and even most parts of Asia, where the payment experience is completed on the website. But here in Africa, in most cases, that experience does not end on the website. In some cases, it doesn't even start on the website. Most of that payment experience actually happens at the last mile when the rider is handing over the product to a customer. That's when the customer pays. And I think before I delve into sort of how we are thinking about this or what we think the possible problems or opportunities are, I'll just give the audience a very common scenario. So a product is delivered by a rider and the customer wants to make a payment, right? There are usually two main options, and both of them have very significant disadvantages. So the first option is that the customer could just pay the rider. Now, this is easier for the customer, but it poses very significant risk for the business. Obvious risk like, what if you never hear from the rider again? What if you never get the money back? Reconciliation can also be cumbersome in this process. So the second option, which is also probably a bit safer for the business, but it's a terrible experience for the customer, is that you just pay directly to the business's head office. And the reason why this is inefficient is because, obviously the rider has to wait for confirmation to come. This could delay. They have to call the operations team, which is somewhere in another office, to receive these confirmations. So all those processes can be very cumbersome and cause very inefficient payment experiences. Now, where we see opportunities is where e-commerce companies here in Africa look at the African market and look at these unique challenges. These challenges are mostly very unique to emerging markets. Look at them and solve them in very practical ways. So we see a scenario where, for instance, last mile riders can have, call it whatever, you can call it virtual terminals, you can call it sub-accounts, where they can essentially receive payments, get instant alerts for these payments, but not be able to withdraw the money. And the HQ gets the money, or the business gets the money directly. They're also able to confirm over there and to basically complete the transaction, right? So that provides the rider the ability to know whether the payment has been completed, and it provides the business the security of knowing that their money has arrived successfully and is not accessible by any third-party rider. So I think these are some of the solutions that are possible to solve some of the very unique experiences or challenges that we have in the African continent, which is mostly around the last mile. So yeah, to answer your question, Taiwo, I believe that there will be a convergence, but that convergence will look very differently from what we've seen in the West or even in Asia. And it's up to e-commerce companies and fintechs to collaborate and figure out what solutions work for us and is practical for our users.
Perfect. Thank you very much for that perspective. I understand this is a bit of a departure from the questions you guys saw yesterday, but it's partly intentional, partly responding to some of the things that we've also said earlier when we started this conversation. I see that there are a few questions in the Q&A box, and we're getting a lot of audience engagement in the chat box as well. So let me encourage you, if you have questions, please leave them in the Q&A box. In a bit, we'll get into all of those questions and then respond to them. If you have comments as well, please leave those comments. So again, if you have a departure from the questions that my guests, my panelists had sort of been prepared for. But I think this is also very useful, right? Because we're getting some audience engagement that suggests to me, at least, that we're touching somewhere that people are interested in, right? And in my head, I want us to sort of dig in a little bit about this. Felix, you spoke about, this component of pay on delivery, and I understand you're speaking from the Ghanaian perspective. Evelyn is speaking from the Kenyan perspective, and then we have Taiwo as well, who speaks to this from the Nigerian perspective, right? One of the questions I've seen in the chat box, and also a question I want us to touch on a little bit, is the question of trust, right? Because when you begin to, accommodate alternative offline payment, cash-based payments, and so on and so forth, right? You have to deal with a lot of trust issues, right? And I'm curious the extent to which this differs from these three countries that we have represented in the panelists, right? So Evelyn, I'll come back to you, and then I'll come to Payaza, because there was something interesting that Felix mentioned. I just want to see if that's something that Payaza also incorporates in how you think about, enabling digital payments. Evelyn, in your perspective, right? And you've done fintech products for telcos. Now you're doing it for an e-commerce solution, right? What's the biggest challenge with implementing these cash payments? What's the biggest challenge, rather, right, with designing for trust, designing how to collect offline payments, and then you have to also think about the trust component and so on and so forth. What is it that comes to mind when you think about this type of interesting problem, especially in Kenya?
All right, thanks, Abraham. And I could speak from various contexts, but I have a preference to speak from an experience we've had with Copia specifically. Now, in terms of designing solutions and establishing trust, both between entities and the customers with the entities, there has to be an inherent desire to understand the customer pain points. All right, what are the specific pain points they have around payments, around cost, around experience, and being able to innovatively and flexibly solve for that is one of the key ways to better establish trust between e-commerce entities and the customers themselves. Now, the other thing we'd need to consider is how do we effectively simplify the experience, especially for the rural customer. When we talk about a typical Copia rural customer, they are extremely rural, where we have to deliver their product from our fulfillment center to a depot. A last mile truck then goes to the collection point, which oftentimes will have, another breakdown with a border person delivering the same. And making sure that we fulfill our promise to the customer, that they will have exactly what it is they have ordered for within the timeframes we have committed to deliver, and have a seamless payment experience in the process. So I think establishing trust begins with us, with how we design the journey, and the journey has to be designed from a perspective of understanding the specific customer segment that you're serving.
Interesting. Now, coming back to you, Felix, Taiwo, when Felix was just speaking a few minutes ago, he mentioned something about, thinking about empowering, unlocking last mile e-commerce opportunities, right? And then you also mentioned something about, correct me if I'm wrong, Felix, but I think you mentioned something about empowering like agents, delivery agents with payment solutions like mobile POSs and so on and so forth. I'm curious, Taiwo, is this something that Payaza, for example, incorporating some of the solutions that you offer? How do you think about offline acquiring, basically, is the question, right? Are you strictly, focused on online acquiring and acquiring merchants and getting people to pay at the point of sale? And it doesn't have to be about Payaza per se, right? We can make this broader, but I'm curious about how you think about offline acquiring at that last mile point, when this thing, it's e-commerce again, right? Someone purchases it, it has to get to the person who has purchased. I'm curious what your thoughts are.
Okay, thank you, Abraham. Yeah, I actually wanted to speak on Felix pain points on the last mile, and thank you for bringing it up. So, in Payaza, our mission is empowering seamless, secure transaction through innovative ways, right? I will stop at the innovative. Now, we recognize the significant role of the last mile in e-commerce, especially here in Africa and in Nigeria, wherein trust is still an issue, but we are seeing growth in people trusting the players in the ecosystem to live to the expectation of the contract. Now, to address the pain points, in Payaza today, we have a product called branches. Now, I think you were the one speaking that when you transfer to the head office needs to confirm to the rider, which takes all players' time. While I've delivered, instead of me waiting for someone to say, oh, you've gotten the alert. So what does branches represent? This is an offline solution. We know that commerce is commerce, regardless of the channel used. Either I'm using my website, which makes it an e-commerce, or I'm on the street in Idumota, a street in Nairobi, or somewhere in the streets of London, right? Commerce is what is being done. Now, to answer the last mile, what branches does is, there's a main business, let's use the word head office, right? And there's a rider, the last mile guy, that fulfills the e-commerce contract. Now, a payment issue. What does branches do? Branches is a bank transfer enabled solution, wherein each rider has a dedicated account. We call it dashboard, a dedicated bank account, wherein once I'm delivering the product to the customer, an account number is given to the customer to transfer. Instantly, I receive the alerts. I can log on to the dashboard. I see it. Head office as well. No one is trying to cause on to say, oh, help check. I'm expecting an alert from Abraham, 5,000 error. They can easily also log on to the dashboard, see the transactions, which also means that at the end of the day, each rider, let's assume we have about 10 riders, all their collections can easily be monitored. What we've solved there is a case of trust, security, and at the end of the day, settlement. All these collections will be put together and goes into the main account of the company. Now, another issue with the last one is reconciliation. How do I tie payment from Kabiru, who is the rider to deliver shoes to someone in Magodo? Payment from Musa, who is also delivering maybe cakes to someone further down in Kaduna South. How do we tie that? Through the branches. Each of these collection has a record, details of the sender. It ties it to each of these particular, payments, that it makes it very easy for you to trace. You don't even need to have a reconciliation officer. We built that product to be very robust, that as a self-service, you can do your settlement, your reconciliation, wherein you have a margin. You can even take out of your own money and pay out other sellers to fulfill their own end of the bargain. And all this can be as good as immediately, no holding of funds.
Interesting.
Your settlement is as good as now, which solves the issue of, oh, if I pay with cash, I'll get my cash now. If you also pay with branches, you have your cash, because settlement is immediately. And that solves the last mile. And while we are also trying to solve that for, I can categorically say we've solved that for the offline side. For the e-commerce side, we are also trying to make innovative products that will cater for their need. A QR code. I can just scan something from the bar, from your Instagram, a payment link that is enabled to process any type of cards, mobile money, either in Kenya or in Ghana, and other types of payment options. Thank you.
Okay. Perfect. Thank you. Just because we need to wrap up and get into some of the questions from the audience, that's why I needed to stop. But you raised some interesting points that I will sort of come back to you when we're drawing out sort of like a summary about what you guys are doing with the last mile. There's an interesting question, but I'll reserve that question until we come back. I see we have like 6 questions waiting for us, and then we have a bunch of other questions that had come prior to the conversation. I'm going to start with the first question here, which is the one-time payment platform for that. But Taiwo, you're the payments guy here. Is there a one-time payment solution that you can use for all African countries? I'm not sure. I think that there needs to be some caveats to this question to properly answer it. But Taiwo, quickly, in like a minute, is there any payment platform that is available across all African countries, not multiple? The question is very specific.
Okay, thank you, Abraham, for the question. So the answer is yes. Now, let me go back to each region nuances. When you go to Kenya today, M-Pesa is the king. When you go to Ghana today, mobile money is the king. The telcos are taking a big chunk of the market. When you come down to Nigeria, bank transfers, cards is the king. Now, and when we also go to the Francophone speaking countries, you also have mobile money playing a big part of the payment space. So if I say yes, that there's a company that can harmonize all these as a one source, our web checkout is so robust that if you are using mobile money, you can make a payment. If you want to use a card, you can make a payment regardless of your jurisdiction, because our card solution has what we refer to as dynamic currency conversion, which also eliminates any restriction on your own local currency, which can be converted to merchant transacting currency. So I can categorically say that Payaza has that solution to give Africa one currency by making good use of each region's peculiar payment method and harmonize it as a payment checkout. Thank you.
Okay, that's an interesting conversation. Please, there is a survey that has been shared in the link, and I think we're going to run a poll quickly just to check. But there's a survey that's been shared. Please look at that survey and help us fill it out. It helps us plan and think about how to deliver better experiences. There's a poll right now. While I'm looking for the next question, I encourage all of us, we're 70 something people here. Please go ahead and respond to the poll. It's a pop-up on your screen right now. There are just 4 simple options to select from. And then there is also a survey in the chat box. You can click the survey and fill it out after the meeting. But the poll, please respond. I see one person has responded. Please go ahead and respond to the poll. And if you're dropping questions in the chat, please let me ask you to move the questions to the Q&A box. So on your Zoom app, you'll see a Q&A option. Select that and drop your questions there, so I can see them and respond to them, and also mark that those questions have been responded to. Thank you very much. Not sure why my hand is up. Anyways, so that question has been answered. The first question has been answered. Shelley has a question here, and this question is to you, Evelyn. You had mentioned that your distribution network at Copia, 80% of the distributors you work with are women, and that happened organically rather than by design. Shelley wants to know what was the original design, and if there were any learnings that you have made, from this. So Evelyn, if you can quickly speak to that, so we move on to some of the other questions as well.
Thanks, Abraham, and thank you, Shelley, for raising that question. The simple one is there was no design for our agent recruitment process. We do have a specific criteria when it comes to selecting agents that would collaborate with us as part of our distribution network. But that criteria does not exclude anyone by gender. It's just that, over time, we have seen that a lot of women have plugged and played into our ecosystem, and they've become very successful and very good case studies, in terms of building testimonials around the transformational experience they've had with Copia. So the simple answer is no, we've not had any gender bias specifically, but it's just been a very good organic trajectory in terms of how women have plugged and played into our ecosystem.
I should probably add that I think it's fairly common knowledge that in Africa, women represent the highest percentage of entrepreneurs, small, medium, micro, small businesses. So it's not a very big leap to extrapolate, that into sort of what you see at Copia as well. I've been privileged to meet some of the distributors, fantastic people, very passionate about their business. Taiwo, I should mention that you're getting some leads in the comment section. So that's one of the benefits of sponsoring TC Lives. You get leads and you're getting some leads, so you should probably check those out. And back to the questions now. We have a question about pay and on-delivery business model that is being practiced by e-commerce companies. Kingsley has asked that question. I think, Felix, you mentioned pay on delivery. So if you want to respond to that question, Kingsley wants to know how the pay on delivery business model works. I think that's something you mentioned that you do. So if you want to please mention, give us a brief overview, very brief, because we have a bunch of other questions, not just in the Q&A box. I think please leave more questions, but also questions that were sent in before we started this session. And then I should also add, if you've not responded to the poll, I'm not sure if it's still up, but But if you've not responded to the poll and it's still up, please respond. It's very important. It helps us. Just about half of us have responded to the poll. People, help me out. Please respond to the poll. It's super important. There are 4 questions, and then you have a few options there. Just select those options. And then later you can look at the survey that we have and see if you can fill that survey out. It helps us plan better TC lives, invite guests that will best answer the questions and address the concerns that you have. So Felix, back to you. The question from Kingsley is about pay on delivery business models. Can you speak to, you just mentioned that in passing, but can you speak a bit more about what you do exactly at Tendo and how that works? And how you've been able to navigate that. You know, Jumia started that pay on delivery business model in Nigeria, and they had to shut that down because it was bleeding them dry, and it was very costly experience. But in terms of like literally people died. Even myself, I'm interested in Kingsley's question. So please help us.
Yeah, so like I mentioned earlier, pay on delivery is a small percentage of our business. And the way pay on delivery works quite simply is that when a customer makes a payment on the makes an order on the platform, instead of paying for the product, whether in full on the platform, what happens is they actually pay for it when they receive the product. And they can either pay with cash to the rider or through a bank transfer or mobile money transfer. Now, the reason that customers prefer this option, or some customers prefer this option, is the trust deficit. So it's the case of what I ordered versus what I got. They want cases where they want to ensure that they only pay for the product once they are satisfied with the quality and with the specifications that have been provided. So yeah, I think that's the overall overview of what pay on delivery is, and how we implement it really on our platform is we've understood that our agents sometimes have new customers who they need to overcome the trust hurdle or the trust barrier. And so we've given some of our top agents this option where we are telling them, okay, we trust you as an agent. And so you can fund your account with a deposit. And whenever you have an order where the customer is not sure of the quality or whether they will receive it or not, you can offer them the pay on delivery option. We'll deliver it to the customer. We'll collect the cash from the customer and then settle it on our end. So that just helps both parties stay comfortable, ensure that customers feel comfortable with the fact that they are going to receive a product that they want. And it also helps our sellers to ensure that they are completing transactions at a higher rate.
This is very interesting because you have like your highly rated agents, and then you're offering them this service that requires a high degree of trust, because it would seem to me to work the other way around, right? But now you have these people that you already trust them, right? But people still want not to pay online before they receive, and that's an interesting conundrum. But let's move on to the next question from Ruth. And Ruth wants to know how fintech can benefit companies that are in the real estate industry. I wish we could allow Ruth to actually explain what this question really speaks to, but I guess we can also take a stab at this. Taiwo, this is going to come to you because you're the fintech guy here. Is there a solution that you guys offer that is that addresses payment concerns for people in the real estate industry? Ruth mentions specifically the finance and accounts departments of these companies. So I think she's concerned about payment, rental collections, and also reconciliation. Is this something that Payaza addresses? Yeah, Taiwo, please help us very briefly, please, so we can get to your other questions as well.
Thank you so much, Abraham, for reading out the question, and thank you, Ruth, for asking the question as well. So for real estate, it's just as good as you saying, I have a property down the road, and there is someone in London that is interested. The guy on the other side spent in pounds, right? And Ruth's company is in Nigeria using Naira. If they are to make that payment through the traditional banking system, that could cost a leg and an arm, right? And it could also mean you spending 3 days to get that payment confirmed. So what we at Payaza has done is why Root is trying to get payment from that buyer in London. A payment link, just a tiny URL, enables that payment to get to Root's account in Nigeria. Now, our dashboard is robust to the point that you can see all your transaction details, the ones that are successful, the ones that the customer decided to drop off, which gives you a lead to follow up with that customer to know the reason why they drop off. So it's also like, it's so robust that you can convert a drop-off customer to your real customer. Now, going back to the payment options we have. So the payment options enables the real estate sector to collect payment outside the traditional banking system, regardless where their buyer or potential buyer is. Now, the second ask is, the guy used pounds to pay Roots. I'm using Roots as a company now. How can Roots spend pounds, the Great British Pounds, GBP, in Nigeria? So what Payaza, the robust settlement solution is, we take cognizance of that difference. And our settlement allows you to ask us to convert that pounds to Naira for you at an agreed rate, which works with the market rate. So you don't need to find a BTC guy or an Aboki to say, I have pounds, give me Naira. And that can be done from our dashboard, our settlement. And it's so transparent that when you want to do reconciliation, you don't even need to have any requisite, an advanced knowledge of accounting before you could determine that this is money from Taiwo that bought three-bedroom flat in Ikoyi. This is the currency of trade, the conversion rate. It's so easy that you can trace your payment, reconcile, and have the funds for your further use. So Payaza has settled that. And we also have a mobile SDK solution wherein if as a real estate, you have an app, we can incorporate our mobile SDK into your app for your users to make payments from the comfort of wherever they are, anywhere in the world. Okay, so I think that's the issue.
Okay, perfect. Those are interesting points. We have an interesting question here from Kingsley, asking if traditional banks are part of the problem or solution to the e-commerce market, which is projected to be a $75 billion market in Africa. That is an interesting question. Off the top of my head, this is just me, moderator. I'm not supposed to answer questions. I'm supposed to be the one asking the question. I think banks are not a problem per se. I think fintechs just need to find ways to work better with banks, because ultimately, right, the funds have to get routed through the formal financial system. One way or the other, the money is going to get into a bank, whether or not you like it. So I'm going to skip that. I hope that answers the question, Kingsley. And an anonymous attendee wants to know more about Payaza Boost. I will direct you to reach out to Taiwo and the Payaza team after this meeting, and they will be better able to provide answers to you and supply the answers to that particular question about their product. Kingsley also has another question, and this is to you, Felix. I think this is an interesting question, Felix. If you're looking at your screen, you should see this question. It's about how you handle the logistics costs of returns, and when product is returned to the seller. How do you bake this into your business model that takes care of this cost? Just a quick overview. You don't have to go into details of specificity of your business, but just a quick overview of how you think about returns and so on and so forth.
So maybe I'll start with the latter part of the question, because I think it's a very interesting question overall. Our return or our cancellation rates are extremely low. And that's because if you look at the reasons why most people or most consumers cancel orders on traditional e-commerce platforms, it's simply because they can't, right? Like they place an order, maybe they change their mind, they're no longer interested. they don't have any personal relationship with the platform. They don't really care much about who the platform is or the brand. They don't know anyone there. So they are more likely to just cancel those orders if they feel like they've changed their mind. Because on Tendo, we approach e-commerce differently, where we leverage on people. So we leverage on, say, Kingsley. We know that you are a trusted person in your society. We've empowered you to start your business, and you are selling to people within your community. We found that your customers are more likely to trust you more and trust your recommendations, and are also less likely to cancel orders because they know they have a personal relationship with you. So that's an inherent benefit of our business model, which is that because we are leveraging on the community or the social trust that most of our sellers have, cancellation is really low. Now, in cases where there are the very limited cases where there are those cancellations, what we have is we have in-app wallets where these sellers are supposed to sort of pre-fund with the profits that they make. And those wallets basically cover for the cost of logistics. So say an order goes, we give a premium reseller a chance to do cash on delivery, and the order goes, and for whatever reason it fails, there are funds on their wallets. There's a part that is reserved for covering those kind of logistics costs, and that's how we account for those scenarios. But like I mentioned,
very smart. I
mentioned, the cancellation rate is significantly lower because we are leveraging on the social trust that e-sellers have.
I'm sure Kingsley is impressed with that answer. That is very smart. I think it also explains why you chose to do this with sellers that you trust. So you're already reducing the rate of returns because you're selecting for people that will probably deliver high quality products. I'm going to come to you, Evelyn, with this question from Mansour. He wants to know about KYC because not all Africans have an ID. Why am I asking you this question? Because of how Copia operates, right? Peri-urban, rural areas, they're not exactly the people that you expect to have access to a lot of government services and a lot of KYC and ID solutions. I mean, Kenya is super good. I think national identity, barring Huduma number, is pretty much more universal relative to other markets, right? But you still have pockets of people who probably do not have IDs and so on and so forth, also including your distributors. And so if you can respond to Mansour's question, let's start from the last question. You talk about trust. How do you do that without knowing your customer? I think Copia is Evelyn's a great person to take that last part of Mansour's question, and then we can also touch on know your customer procedures. We have to be a bit fast because we are approaching the end of the session, and I want to give our panelists the opportunity to also throw in a few last words, but it's dependent on how we answer the questions. I'm going to have to stop taking more questions on the Q&A, but yeah, Evelyn, please go ahead. I think now we're getting a lot of questions coming.
Thanks, Abraham. So from our perspective, being predominantly e-commerce in nature, our KYC is largely related to our onboarding process with our agents, okay? Because they're the people that we collaborate with to make sure that we have last mile access to our customers who are, as you mentioned, rightfully rural in nature. All right. So when it comes to establishing trust between ourselves and our customer, the principle is simple. What am I offering the customer? Right? We obsessively work towards ensuring we offer very good quality products at the best possible price. That's a fast avenue through which we establish trust and making sure that we are able to deliver that product so that the customer not only pays us, but consistently pays us. All right. And this relationship, in essence, has historically been fortified with the agents that we are working with. So from a KYC standpoint, we've seen, or we have leveraged our agents as critical partners in being enablers in accessing customers. Now, what we require, and if I can add a little bit more to what Felix has said, is that we also have been testing payment on delivery and solving for offline payments. So we then have largely been a pay before you deliver entity. right? Because that's the only way we can secure ourselves. If the customer is expecting the product to be delivered by a certain day, they have a window of opportunity to make sure they have paid before they access the program. So with that particular model, KYC is not necessarily required for the customer, save for the fact that they would have to pay for their product before they receive it on hand. Now, in as far as enhancing KYC, I think there are significant opportunities to digitize the process of actually even getting things like national ID cards, all right, to simplify that process for the customer, so that then collaborations with fintechs and being able to obtain the relevant KYC information becomes something that's much easier for a customer to provide and for the fintechs and e-commerce entities to access, all right, in terms of establishing that level of governance where KYC is concerned. So there's an opportunity for massive collaboration with various players. We're looking at governments, we're looking at including network providers as well, all right? And we're looking at fintechs, we're looking at banks and e-commerce players in sort of coming together to figure out how do we then simplify this process so that we radically reduce friction, radically reduce barriers to access for the largely excluded market.
Thank you very much for that response, Evelyn. There's an interesting question here from Shelley. Two interesting questions actually from her, self-related. First one is about besides immediate advantages and access, convenience, and economic growth, she's concerned about plans towards sustainable impact. And then she also mentioned the positive impacts that remain after interventions. And I think I need to do a bit of clarification. So there is, I think Shelley comes from the development community, which is a community that I'm also very close to. There is the place of interventions, and when you think about interventions, they're typically short-term projects that want to correct an abnormality or an injustice or a market gap and so on and so forth. I think these are beyond interventions in the sense that we're thinking about creating businesses that can last and become like a part of the daily lives of our users. However, I'm going to let our speakers speak to these concerns about impact, sustainability, and making sure that you're not just doing business, right, but you're also doing good. I'm going to let them speak to that when they're rounding up the conversation. So Shelley, permit me to skip those two questions. I think they're a bit related. Dayo has a question for you, Taiwo, about chargebacks and so on and so forth. I think, Dayo, please permit me to ask that you reach out to Taiwo. I'm going to ask our guests to drop their, I don't know, LinkedIn or emails in the chat box so everyone can see it. And then I'm going to ask that you reach out to him with that question. There's also a question in the chat box asking about seamless payment solutions for informal markets and so on and so forth. I'm going to ask our guests to please leave your contact information. It could be emails, it could be LinkedIn, however you prefer to be reached out to in the chat box. I think there are great opportunities in this webinar for lead generation and business networking, and that can happen in the chat box. I want to stick to the questions about the conversations that we've heard. Mansu has a question here as well about blacklisting of customers and the experience. And then Noah has another question. I think we've treated the question of real estate and fintech. So we're just going to address Mansu's question about blacklisting of customers. I'm going to let all three guests respond to that very quickly. Have you had experience with having to blacklist a customer? And how did you deal with that process of blacklisting the customer and having them respond to not being able to use your platform? So I'm going to ask Taiwo to respond to that because you deal with fintech, which is a very interesting and a very interesting market, to say the least. And then I'm going to come over to you, Felix, and then Evelyn is going to wrap up that last question from the Q&A space, and then we'll do something else. But quick question for you, Taiwo. Have you ever had to blacklist customers? you're in fintech, you deal a lot with fraud concerns and so on and so forth. How did you, or how do you, because it's an ongoing concern, how do you handle the need to prevent some users from accessing your platform very quickly, so we can go around and then come back and everyone is going to share a few thoughts and then we can wrap up the conversation. Taiwo, please.
Thank you. So blacklisting of a customer is a collaborative effort. Collaborative in the sense that a case is made against the customer. We give the customer an opportunity to prove his or her own case, while we also work with relevant stakeholders. We have the compliance, you have the risk guys. When they vent whatever could have led to the blacklisting, if it is justifiable to keep such player outside the ecosystem, we align with the professional advice. Because one of the issues e-commerce is facing today is trust. And the best way you can guarantee that is when they know that your system is bad actor free, they come to you. So how do we keep the bad actors out? We listen to their case, professional judgment is made. And if there is need for us to restate them, we restate. And if there is no need to restate them, we blacklist them and we let them know the reason why that decision is taken, because we also respect their own view of the case. So that's how we do. Thank you.
Thank you very much. Coming to you now, Felix. You do pay on delivery. You also handle merchants who use your platform to sell their products and handle their customers. Have you had, I think you have a two-sided, you're a marketplace, so you have like two sides. You have the customers, and you also have your merchants and the people who are using your platform to reach out to their customers. Have you ever had to blacklist either of both sides of the market? And how do you, handle that process when you need to do something like that? Felix, please.
Yeah, so for the end customer or the one who is actually buying the product, not so much. But for the seller side, the people who are getting inventory and reselling through our platform, we have seller guidelines that they have to follow around pricing the product, ensuring that they're not misrepresenting what the product actually is, ensuring that they are actually not just selling products that are not allowed on the platform. And in those cases, we've had very few cases where we've had to block users from accessing the platform because they consistently wanted these rules. So yeah, we do this to protect end customers and ensure that at the end of the day, even though it's the seller's business, we are ensuring that at the end of the day, the end customers are protected and they have the right kind of products and services that they want.
Interesting. And even have you ever had to remove distributors and agents? If you can maybe share an anecdote of how Copia handles, situations like this, and something that would give rise to that the need to sort of bar someone from using your platform.
Okay, so we do recognize that fraud is a risk we need to be aware of, and there have to be mechanisms to make sure that we mitigate it. On the agent side, it starts from the vetting process, all right, in terms of the criteria that our agents must meet. There is sort of a probation process, which makes sure they are aligned with our ethos in our business. They are well and effectively trained in terms of the way they engage our customers and market our products to our customers, and that they are compliant with all the processes and procedures we have put in place as safeguards. On the customer front, we actually commit to being compliant with client protection principles. All right, so making sure elements around tech security, consumer and data protection are safeguards that are in place to protect customer interests, against any avenues that would be potentially explored for fraud. All right, so those are some of the measures I would say we practically apply in terms of making sure we mitigate the risk and follow a procedure in case of any eventuality, in terms of ensuring that the right investigation is done and there are consequences in place.
Interesting. And thank you for that. I see there's a bit of virtual networking going on in the chat. I encourage that. Please feel free to reach out to anyone who's been kind enough to share their contact information. I also want to ask that you please fill out the survey that has been shared. I'm going to ask the TechCabal team to reshare that survey link. Please do that. It helps us with understanding how best to deliver events. And then I'm going to next up, we're going to have like closing remarks from our guests and our panelists who have sort of honored us with their time and being part of the conversation. But before we go into that, I just want to ask Mansour directly if the last question or the last responses addressed your concerns, about how I think what stood out for me, just to highlight is you can see how the different platforms from Taiwo talking about how there's like a collaborative effort, which I'm well aware of within the Nigerian ecosystem to sort of prevent bad actors, from consistently hitting fintechs, and to how Felix also spoke about there, how there's sort of like a pre-qualification process, which is also something that Evelyn alluded to, right? So it seems to me like the learning that we are taking away from this conversation is we've moved beyond, having to deal with uh, bad actors, that come to the platform, to trying to prevent that from even happening. Doesn't mean that it's not going to happen, but at the very least, rather, you reduce the risk of having to deal with bad actors that are trying to exploit the system. Um, that's the end of the session, and I think some of the questions that had come in previously before we even started, some of the audience questions were addressed, even though we sort of moved around a little bit, but I'm just seeing those questions and seeing that we touched on some of those questions. I'm going to ask our guests to wrap up, starting from Evelyn and then all the way to Taiwo, who opened the session. I'm going to ask you for last comments, and I'll ask that you incorporate in your last comments something that addresses the concern that Shirley had raised, about the sustainability, or I think to put it in another way, the longer term impact of the sort of work that you do. There's fintech, there's e-commerce, right? Everyone is familiar with the Alibaba story, but also everyone should be familiar with the changes that e-commerce companies like Alibaba cost, in the smaller retail market in the US. Uh, Also changes that we're seeing happening with social commerce, TikTok, Indonesia recently this week, because of government concerns about the impact that it's going to have in the wider market. And the question for you to, as you sort of wrap up, I would love you to include a comment or two very quickly, because we are out of time, about how you think about the longer term impact of fintech and e-commerce when you bring these two things together, beyond doing business, how do you think about the longer term impact of what you're building, solutions that you're creating, and the opportunities that you're offering to the market? Evelyn, please, you'll start us off, and then Felix, and then we'll end with Taiwo, and then I'll hand over to the TC Insights team to close out this session. Thank you very much for participating in the conversation. Evelyn, please.
I think I'll start by addressing the issue around impact. And in as far as impact is concerned, I think opportunities to address for impact are wrapped in problems that customers want solved. And the key to doing that is to making sure that we deeply understand the customer, but that we are also flexible and expedient enough in testing, in learning, in iterating and improving offerings, with the sole objective of making sure that we clearly meet a defined customer need. Now, in as far as how we can collaboratively work with fintechs, I think fintechs need to lead continuously with improving customer experience, making sure that we're offering a seamless, integrated experience. And if we can lead with that from the front and fortify that with critical components such as, compliance and continuously contributing towards regulation, building up on tech security and data controls to safeguard customers, then what's going to happen as a result is this encapsulates into what will lead to more strategic alliances that then offer better and seamless partner integrations, relevant and more inclusive financial services, and then even more expansive data scoring models that then ensure that we enable access for the massively excluded rural customers.
Yeah, thank you. That's interesting. Thank you for starting by addressing that concern. Special thanks also to Elsie and to Mansour, who already leaving comments about how they appreciate the session. All credit to our fantastic guest who answered the questions brilliantly. I'm going to go over to you now, Felix. Please, your last words and concerns about the comments about how you address, the impact question, and then Taiwo is going to leave his last comments, and then I'll just close us out with special vote of thanks from the TechCabal team and the TechCabal Insights team, who are the brilliant guys behind this. Felix, please.
Yeah, thank you. It's been a really insightful conversation. For us, from the impact perspective, I think we can all agree that one of the biggest problems that the continent faces right now is poverty. And the way we are thinking about actively contributing to solving this in the long term is not just through handouts, but actually providing sustainable sources of income for millions of people, right? And so that's what our platform does. We are eliminating the barrier for requiring savings or inventory or capital to be able to start business, ensuring that everyone can actually tap into this $75 billion e-commerce market. We're providing them the technology, the tools, the inventory that they need to start these businesses. And our vision ultimately with this is to create 1 million entrepreneurs over the next 5 years who are empowered with the right tools to actually build scalable businesses. One of the key things that we track on the platform is income generated. Over the last couple of months, over the last couple of years since we launched, we've seen significant growth in these incomes of the sellers on the platform. And so that's how we are thinking about impact long term, is generating or helping these resellers or the average internet user to be able to generate income in this e-commerce market. And obviously, like we discussed today, the collaboration with fintech companies will be pivotal in ensuring that we are able to deliver this service well.
Thank you. Speaking about collaboration, Taiwo, please, will you close us out with comments about how collaboration between fintechs and e-commerce businesses help with, contribute to sustainable impact in the long term, beyond just extracting profit. Taiwo, please, can you close us out?
Okay, thank you, Abraham, and thank you to other panelists who have spoken so well on this webinar. So the collaboration part, or the collaborative effort from fintech, is to ensure that all players in the ecosystem, from the regulators, co-fintechs, the merchants, the last mile players, are all taken care of in the terms of the product a fintech is offering is as good as, is a seamless product, which is also secured and which also takes care of the need of the ecosystem. Then also another way to ensure that is, while doing this, it is cost friendly. Cost friendly means I don't need to spend so much to benefit from this gold mile of 75 billion. And while we are also doing that, we recognize that businesses we also have a need for the urgent 2K, quote and unquote. So we have innovative products like Payaza Boost to take care of that emergency cash need, which also speaks to Felix products that ensures that you don't even need to have a capital before you can participate in the e-commerce space. While we do this, we ensure that compliance, security, flexibility is not a trade-off. While we also work with all players, at Payaza, we believe in collaboration. We don't see anyone as a competitor, but we see them as a partner to the journey of becoming the most trusted gateway in Africa. While we are doing that as well, we also ensure that our employees are growing and they are satisfied with us at Payaza, which we also contribute to the quality of products we are bringing to the market as a fintech, which we have a multiplier effect in the community, in the ways they live. And you see the GDP effect of that in an enormous way. Thank you.
Thank you. Thank you very much. I'd love to close out by extending my special thanks to everyone. Your questions about how you get the recording of the event, access to the presentation, it will be shared with everyone. But I also want to especially thank everyone for being a part of this. Also apologize for the hiccups at the beginning of the conversation. But also, very importantly, TechCabal does TC lives like this regularly, and they are a way we bring special guests. We have them answer questions that are relevant to building sustainable digital businesses on the continent. We try to make those questions to be relevant and very timely. And then we also have other verticals that we do. We obviously it's TechCabal.com. We have newsletters that are important. TC Daily is our daily newsletter, I guess. It's our most popular newsletter. It's read by more than 150,000 people. It goes out every weekday. We have the Next Wave, which is a newsletter I write. It's an editorial about the next big thing in technology, or just commentary when I just rant about what's happening in technology and investment. Thank you to TC Insights. They're the great guys that are behind all the TC lives and even Short. And also thank you to Payaza, who sponsored this edition of TC Live. I think there's been a slide that you can reach the TechCabal. You can reach the TC Insights team. Just email tcinsights@bigcabal.com. You can reach the TechCabal team at bigtechcabal.com. With your questions, inquiries, and comments and suggestions, press releases, and so on and so forth. Any email, we're happy to receive all of them. May not be able to respond to all of them on time, but we're happy to see that engagement with the community that we're serving. Special thanks once more. Enjoy the rest of your Friday and the rest of your evening. Special thanks also to my panelists who were so gracious to share their time with us, from Tendo to Copia to Payaza, our sponsor. And looking forward to seeing all of you soon in person.